the audit firm depends on a single client for a significant portion of its revenue. And another threat to independence is self-review threat. Self-review threat occurs when the auditor reviews their own work or systems implemented by their firm. Self-review threat, it occurs when the auditor reviews their own work or systems that are implemented by their firm. So an example is an audit firm that is preparing financial statements and auditing them. An example is an audit firm that prepares financial statements and also audits them. Then we have advocacy traits. So advocacy traits occurs when the auditor promotes or defends a client's position, undermining objectivity. So an example is representing an auditor or representing a client in a tax dispute. So that is advocacy traits. The auditor is advocating for the client. We also have familiarity traits. Familiarity traits result from close relationships with client personnel. Close relationships with client personnel that could impair objectivity. An example being a partner's relative holding a key position in the audited entity. A partner's relative that is holding a key position in the audited entity. Then we also have intimidation threats. Intimidation threat. So intimidation threat occurs when the auditor is subjected to pressure or threat by the client. Intimidation threat occurs when the auditor is subjected to pressure or threat by the clients. An example being when the client threatens to terminate the auditor's contract if an unfavorable opinion is issued. So that is intimidation threats. Now let's look at ways to safeguard and mitigate threats. Ways to safeguard and mitigate threats. So we have one, firm level safeguards, which involves rotation of audit partners to limit familiarity threats. Rotation of audit partners to limit familiarity threats. We also have policies. We have policies. We have policies to avoid significant client dependence. We have policies to avoid significant client dependence. Then two, engagement specific safeguards. Engagement